Let's get right into it. You could literally possess all the technical knowledge in the world. You could know exactly how to read every single chart, how to meticulously secure your wallets, spot the absolute perfect accumulation phases, and hey, even flawlessly track your taxes using the most advanced software out there. But here is a brutal, undeniable reality of the markets that Wall Street billionaires deliberately keep hidden. If your strategy is driven by emotion instead of a rock-solid psychological framework, you're going to eventually lose your hard-earned capital. It is just a matter of time.
99%. Let that number sink in for a second. 99% of people crash their portfolios. And the real tragedy here, it is almost never because the market itself is bad. No, it's because their own minds sabotage them at the absolute worst possible moment. So in this explainer, I'm going to give you the unbreakable psychological framework used by the financial elite, the exact system they use to stay completely, totally calm while the rest of the world is in full-blown panic mode. Let's reprogram that mind of yours.
The whole foundation of this framework really just comes down to one simple, profound truth. Money isn't just a math game. It's an emotional mirror. Think about it. The financial system isn't just some series of random fluctuations. It is mathematically and systematically designed to exploit human impatience, fear, and greed. And if you don't understand your own reflection in that mirror, well, the system is going to use your emotions against you to siphon away your wealth.
Section 1. The two monsters, FOMO and Panic.
So, inside the mind of every single amateur investor, there is this fierce, relentless war going on. Meet the first monster fighting for control over you, FOMO, or the fear of missing out. I want you to picture that visceral experience for a second. An asset is suddenly skyrocketing, right? The media is celebrating it, your friends won't shut up about it, and suddenly, FOMO takes complete control over your prefrontal cortex. Your brain literally blocks out all logic and reason. It just leans in and whispers, you have to buy this right now or you're going to be left behind forever. You aren't buying based on data at that point. You are buying based on pure, concentrated social pressure.
And this trap follows a super predictable anatomy. First, the media hype builds up. The news is practically throwing a parade for this asset. Driven by that massive FOMO, the amateur buys in at the absolute peak of the market. And then, the inevitable happens. The market cycle rotates, the massive institutional players, the whales, they take their profits, and boom, we hit a sudden, brutal 30% market drop.
Now, this is exactly where the second monster strikes, panic. You log into your account, you stare at that shrinking balance. Your heart is racing, your palms are sweating, the psychological distress gets so intense that you just click sell. You liquidate everything at a massive loss, and you don't do it because it's a smart financial move. You do it simply to stop the emotional pain you're feeling in that exact second. But man, here is the agonizing irony, something we call the rebound trap. Literally 2 days after you panic sell and lock in those catastrophic losses, the market recovers. Actually, scratch that. It doesn't just recover, it often rockets to brand new all-time highs. By surrendering to panic, you didn't protect yourself at all. You just voluntarily handed your hard-earned wealth directly over to the disciplined institutions who were sitting there waiting patiently to buy your assets at a steep discount.
Let's clearly contrast these two realities. First, you've got the amateur mindset. Amateurs trade based on what they feel in their gut, and they see a 30% drop as an absolute tragedy. But the 1% mindset, they operate completely differently. The elite do not trade on feelings, they trade strictly on pre-calculated systems. They understand this fundamental secret: volatility is simply the price you pay for generational wealth. When the market drops 30%, they aren't seeing a tragedy. No, they see a premium discount store throwing its doors wide open.
Section 2. The secret weapon. Asymmetric risk.
This psychological shift we just broke down, that is exactly what separates the prey from the predators in the economic landscape. But how do you actually practically build a system that stops you from making those emotional mistakes? Well, you use asymmetric risk. This right here is the secret weapon of institutional wealth. It means you only ever enter into financial setups where your potential downside, meaning your maximum possible loss, is strictly capped and limited. But your potential upside, that is mathematically infinite. You are stacking the deck so heavily in your favor that a single win can completely change your life.
Think about the difference between financial suicide and institutional wealth. An amateur trader will step right up and risk 100% of their life savings just to make a quick 10% profit. I mean, the risk-to-reward ratio is entirely backward there. Professionals do the exact opposite. They manage their position sizes so tightly that they can actually be wrong 50% of the time. Just let that sink in for a second. They can be wrong half the time,
But because they use asymmetric risk, their few winning trades are so massively huge that they completely wipe out all past losses and actually generate multi-generational fortunes.
You must treat your capital like an army. It is time to completely shift your mindset away from treating your money like a casino chip that you just blindly push across a roulette table. Your dollars are your soldiers. Your job as the general is to protect them, deploy them strategically, and ensure they come back home with prisoners, which, in this case, is more capital.
So how does a professional asset manager actually execute this in the real world? It's 3 steps. Step 1, you never ever send your entire army into an unknown valley. You scout the area first. Step 2, you allocate small, carefully calculated units across high-utility assets. Basically, you don't bet the farm on one play. And step 3, you remove human emotion entirely by using automated limit orders to protect your exits. You set the rules of engagement before the battle even begins. And then, you step back and just let the compounding machine do all the heavy lifting over time.
And that leads us directly to this undeniable truth. Real wealth is built in silence, through extreme discipline, over years. You have got to stop looking at the daily noise of the markets. Those chaotic, minute-by-minute price movements, they are nothing more than a giant distraction. They are deliberately designed to make you feel anxious so you trade more frequently, which of course allows the exchanges to quietly collect endless transaction fees straight from your account. Ignore the noise.
Section 3. Detaching from the Matrix.
Once you finally master your internal emotions and deeply understand how to leverage asymmetric risk, you undergo a massive transformation. You step entirely out of that toxic cycle of fear and greed. You become completely detached from the matrix. But now that you've rewired your psychology and you possess the execution strategy of a pro asset manager, we have to look forward. What is the next major step you must take to secure your place in the rapidly approaching New World Order? Because make no mistake, the global financial landscape is shifting right now into its final evolutionary stage. The global economy is actively preparing for a massive systemic transition, a transition that is going to permanently alter the very nature of sovereign wealth and digital property across the globe. Literally everything you thought you knew about how the world stores value, it's about to flip entirely upside down.
You have officially conquered the psychological barriers that keep 99% of the world trapped in financial slavery. You are awake, but our journey through this explainer is far from complete. In the next chapter, we're going to break down exactly what this massive transition looks like and, more importantly, how you can position yourself ahead of it. So until then, protect your capital, master your mind, and I will see you in part 11.